Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had a steady grind higher all up until about 1 o'clock, and then the market started selling off. But at 10 o'clock this morning, we had data hit the markets, the JOLTS job openings data. That data came through a little bit better than expected, with 7.4 million jobs available compared to the expectations at 7.1 million. But we got a lot of stocks moving, and there's still a chance the markets can go higher. We're going to get into why here in just a little bit. All right, so let's check out the market summary that we've got going on here. We've got the Dow Jones up 0.52%, Nasdaq up 0.83%, S&P 500 up 0.56%, U.S. oil continues pushing a little higher, up 0.5%, gold retreating just a little bit, but we'll see why, and that's obviously a breakout from that parallel, which price is retracing to today. Bitcoin did push up a little bit higher, up 0.3% as we are filming. So now jumping into the S&P 500 heat map, we did have some winners and losers today. Look at Google's pulling back ever so slightly. Same with Meta, but Meta had a fantastic push yesterday. That's obviously to be expected. AVGO made brand new all-time highs. We'll check out that chart here in a little bit. NVIDIA was a big pusher today too. At one point, the biggest up on the mega cap sector. So in the rest of the charts, though, we have a lot of green on the screen. Yesterday, consumer durables were all red, and now they all flipped to green. Tesla did dip too in the afternoon and then bounce right back up, as you see, looking like it's going to finish the day in green territory. So let's jump into some analysis with the SPX instead of the SPY today. And a couple reasons why I did so. We've had this declining parallel channel we've been focusing on the SPY for now several weeks. And so I want to show you what could potentially happen if we do break out and stay above that. As we see now, we're going to be closing above this pivot high. That's significant because now that's starting to release all this bullish consolidation for a move higher. Next resistance is going to be right here at this declining trend line. You can see it was annotated right here, this bull trap that occurred when we made new all-time highs back in February, and then price just collapsed afterwards. This trend line connected on through will be resistance when price runs up into it. The thing is that since we consolidated not that far away from resistance, that weakens this area of resistance just ever so slightly. And then in addition, I want to throw this on too. I want to show you this longer term parallel. You see this on the SPX. This is a tighter parallel channel from price movement going up over the course of the last year and a half. Once we did break this, and normally when parallels are broken, they like to go up and retest with that parallel or trend line that it had broken. So if we do that with this current space and time that we're at, we're going to be making brand new highs again. And I am tempted to think at that point, we will likely start seeing a lot of selling pressure. I have a cycle date in the middle of June that's coming up, not far away, guys. We're going to be there at June 15th, which occurs on a Sunday. And we have both positive and negative influence with this upcoming cycle. So there should be a lot of up and downs. And I anticipate if price is around that area, about that time, we could tag up here at that top end of this parallel channel. So if I flip over to the weekly chart, though, and also throw on this simple moving averages, look what's happened here on the weekly chart. With this big fall that we've had and V-shaped recovery, the 20 moving average, which is this yellow trend line that you see right here that's curving up, never crossed over this blue trend line, which is the 50 moving average. So the 20 moving average is still in its proper place above the 50 moving average. And then the 200 moving average is way down here. And when we were selling off, I anticipated us in April at least to tag that area. That just shows how strong the market was. Even though all this selling pressure was hitting the markets, we still didn't reach the 200 weekly average on the chart here on the SPX. Now, another thing I want to point out, in case you guys don't know, this is critical to understand. We had occur right here from May 5th over into May 12th. We had a river theory occur. Now, river theory is taught with Garrett's Winning Trader series. I highly recommend you guys take a look at it. It's going to be worth your while because there's factors in there that really help separate you from the rest of the retail investing crowd. You can start trading like the pros, understand what's going on so you can be ready for the next move and anticipate that so you can capitalize on the money. So back into the SPX, notice here we had price close for this week of May 5th, and then gap up over both of these standard moving averages. In doing so, it alleviated any sort of resistance that would have occurred had price just continued to chug along through it, and allowed price to continue moving higher. So what this all tells me also, looking at the weekly chart, we're not anywhere overbought on the weekly chart yet. So that tells me we've got more room to run, which would make sense for price to potentially move up higher, catch resistance at this trend line, and then ultimately on the bottom end of this parallel right here. Bottom end of the parallel is roughly at $6,241. Into the Qs. The Qs here, you can see we just dominated this resistance area right here, 525.03. This day we attempted to break through, got rejected. Today we are breaking through and closing higher. So that now gets taken away on the charts. That resistance area worked just for only 3 trading days before now attacking it again today and piercing and closing higher. Next area of resistance is all-time highs on the Qs. And when we do have a lot of momentum in the stock or in the tech sector, this can be understood that we could push higher, hit those all-time highs, and then ultimately next area of resistance is going to be this trend line extending out as you see it right here on the charts, which currently is going to be roughly around 558.23, which would also coincide with the SPX hitting the bottom end of that parallel channel. Into the SMH. SMH also did have a good day, but not as good as the spiders in the Qs. We see here we haven't closed above all of this chop today. So that needs to be the next step for the SMH to move higher. If it does that in the coming days, next resistance area is 260.05. Into the IWM, look at this. Fantastic move on the IWM, guys. I love tracking this with you guys every single day to go through the developments and the thought process that goes into these charts with analysis, the patterns that are displayed. So back into the IWM, we see here with this declining trend line, we finally now have poked above that declining trend line. First step accomplished. Next step, we need to see a continuing move closing above this candle. Then ultimately, we could potentially pull back, hit this trend line again, and then much like a springboard at the swimming pool, that will give momentum for a further bounce on the IWM. And obviously, looking back at the QQQ, look, we're right near all-time highs. Same thing with the SPX, but the SM or the IWM, long way off the highs. The IWM and small cap stocks could have a lot of room to run. First resistance, 214.38, but then followed by that, we're going to be getting up into the 230s. So we do have a potential for a lot of small cap stocks to make some significant gains in the coming weeks. And the Bitcoin. Now, Bitcoin, we discussed yesterday how this bear flag pattern was developing on the charts. Even on the 10-minute, there was a period there during the close that we didn't get above a certain trend line that I displayed on the chart. Well, then after 4 o'clock, going into the evening, price then ripped higher just ever so slightly. As you see here today, catching resistance right here at this 50% area of the parallel. The 50% area is right at $106,960. And so that area right now is the area to beat for Bitcoin. Still bearish consolidation. Even with this slight incline like this, that would be exactly how a flag would hang from the pole if you were to flip this pole up in a proper way. So this is a bear flag, and we'll see how that plays out. We need about 3 more days of consolidation before that matures. Into gold, we see gold here as yesterday broke out of this parallel, but then today just retraced. And that's what I expect to happen with IWM. We'll see if we have another day or so up and then a pullback and then a retracement right there to that trend line. That's what typically happens when these parallels and major trend lines are drawn on the charts. Price may break up. That's why, guys, you never want to chase. The technical analysis, you may see stocks running, and we're going to get into another one with CEG later on in the show, but you just don't chase. You just wait, be patient, act like a robot, wait for the level to come back. Most importantly, when you do have a breakout, wait for a confirmation and then the pullback, and then that's your buying opportunity. You can sit in the bushes, wait like a sniper, and wait for that price to get to where you want to get in, ultimately giving you a better price and better odds for making profits. All right, so gold, as you see here, retracing. We'll see what gold does tomorrow. If it comes right back in, since we did not confirm today, it easily can come right back into this parallel channel and trade lower on the charts. Silver took a pause today, mainly just went sideways. But the most important thing to take away from today's price action, we were all the way down here, but where are we closing? Right back up near the highs. So that's very strong momentum for silver. Can expect some bullish consolidation over the next few days. If so, that will allow silver to break through this 34.86 and then pushing up to this inclining trend line around 38.97. Into U.S. oil, as we discussed, oil is up ever so slightly today, not confirming the move above the declining trend line. We're going to have to check back tomorrow for that pattern to develop. But as you see here, it won't qualify for it because it's pivot low, but this all in all is very similar to an inverse head and shoulders pattern, which would put price up on oil up here at $68.69. So probabilities are starting to shift for that. We just need a confirmation move into this area above the trend line. Into nat gas. Nat gas saved itself yesterday and also saved itself again today, back closing up inside this wedge pattern that's developed on the screen. So all in while, this is kind of a no-touch zone for me right now. This could break higher or this could break lower, and I'd rather react to that price action and get into it at the support levels, much like I described how you sit back, wait for your level to be hit, and then get into the stock or commodity such as nat gas. Into the 10-year yield did push a little bit higher today with that JOLTS data that hit the market, but it really just chopped sideways. We'll see if we continue chopping sideways over the coming days. Then in that case, a bear flag pattern would be presented, which then would imply a little downside on the 10-year, which would also alleviate pressure in the markets and likely start pushing the markets up a little bit higher, much like I mentioned for the SPX. Into AVGO, look at this. Brand new all-time highs for this chart on AVGO. Extreme accomplishment here for AVGO. Fantastic move on this chart, but we did outline this, guys, every step of the way. We've been covering AVGO in particular because it's been such a strong stock when you compared it to the other mega caps such as Tesla and Apple. But AVGO, man, what a move. Brand new all-time highs, and I don't think it's done yet. If you see right here, we do have a measured move from just this bull flag pattern up to 261.31. Now, if the markets still keep pushing, we could be going up to the very next inclining trend line, which is derived all the way back here from a pivot in December of 2021, connected over to the pivot here in December of 2024. And that would be the upside max target that I would expect on this type of move. But anytime, just as I've mentioned before on the gold chart, when you break out of a parallel, the likelihood is that we retrace down to that parallel and then bounce higher. We want to see that happen with AVGO if you are an AVGO bull, as that will help propel the stock up higher, potentially up here to that trend line, currently right around $280. All right, next up, we've got NVIDIA. NVIDIA had a great move on the mega cap sector and group today. But as you see here, it really didn't get out of where price was just a few days ago. Now, we've had this bull flag pattern right here that is starting to play out in kind of a sideways move diagonally up. But we have this bull flag measured move right here at the 50% area of the parallel to keep your eyes on. All of that would make sense considering the spiders closed today in the SPX. We could be pushing up just ever so slightly higher up to 151, about $10 higher than current close. And then I would expect major resistance right here on the charts and potentially a pullback down to the bottom end of this parallel channel. Into CEG. Now, CEG announced overnight that they did have a big deal with Meta. They have a 20-year, you can see it down here at the lower right-hand side of the screen, a 20-year power deal with Meta, ensuring its Clinton Clean Energy Center operates through 2047. So this is a big deal for CEG, but look what happened with CEG. It was a sell the news event. You can almost tell with this price action moving from all the way down here at the April 7th lows, which a lot of stocks were at that bottom end of the chart. So you got to kind of give it a little bit of leeway there, but this rapid move up caps off basically cherry on top with the news with this secured deal with Meta providing power for their data centers. But it was almost like baked into the price with all of this move going up higher in the charts. Now it was a sell the news event. Prices come right back down. If selling continues, this could be a good buying opportunity down here in this collection of support. We got 294, 288, followed by 272. All three of those areas should provide ample support for price to move up higher on CEG. And if it does, we're talking about 389.54 up here on the charts. So all the while, just like I said before, you don't chase moves. When this stock was ripping earlier today, I assure you there was tons of investors saying it can't go down. They had this new 20-year deal with Meta. Just pile in, get into this stock. It's going to go higher. And they may be right, but they are not right today. The price action came right back down. Be a smart investor, wait for appropriate levels, and then get in there so you don't feel pain like this in the future. Into Palantir. Palantir also, again, continues to chug along, but this stock is near its end as far as running. It continues to move up, defies gravity, but is hitting all sorts of resistance trend lines. This longer term trend line, as you can see here, is this one underneath current price action where price has now closed up above it. We have not confirmed up here though. So I anticipate even if Palantir continues moving higher, I anticipate some sort of pullback and ultimately coming back here into the top end of the parallel channel right around $97. So pay attention to that. Where do we close tomorrow? That will really help guide you because there's an additional trend line of resistance that we're hitting that's much more short term, but it originates here in February and strings along over to the most recent pivot top. And then now it actually hits today's highs. So that area is still near-term resistance. We'll see if price action can move above it tomorrow or close below. And if it does close below, the likelihood is we're coming right back down to the top end of this parallel channel. Into Dollar General. Now, Dollar General had earnings, and as you see right here, earnings did well. It was up 20%, and then also beat revenue 1.4%. So when I look at this chart, though, look at how far down it is relative to where price action was over here. This stock has been beaten up. So anytime you get any sort of positive news, you're likely going to get a rip, just like what we're seeing today, 15% on the chart of Dollar General. Now it ran right into the first resistance area at 112.63. So we knocked that away. Next resistance area is 141.21. But I want to point out down here too, the beauty of technical analysis. You see this declining trend line that I have here, cuts through from pivot to pivot to pivot to pivot. And then right through here, price initially broke through, didn't confirm, came back down, broke up again, did confirm this time. And then look at the price behavior when price does confirm above a declining trend line. Price came back down, tagged the trend line, and then like a springboard, boom, right back up. It went from a price of $86, now currently up at $112. Big, huge move on that stock, about a 30% gain right there, 28.96% gain, all with you being patient. If you were to see this chart with this pattern develop, we're not buying up here at 95 bucks. We're not buying over here. Now, you could obviously inch in with a very small position, but look, you would have been out of the money there for about 20 trading days. And then finally, after hitting the proper area of support, boom, the price action moves up. Something to learn, guys, something to take home, understand this stuff, put it in your trading reservoir. That way your arsenal is going to be bigger and bigger every single day. All right, so now flipping over to Dollar Tree. Now with Dollar General's good news on earnings, we have Dollar Tree lined up for earnings tomorrow morning. You see this, it's going to report before the bell. But today, Dollar Tree also had a sympathy move up with Dollar General with their good earnings. So is a lot of this move already baked into the current earnings? We'll see tomorrow morning. I still do anticipate it, just like Dollar General. You can see here, this chart is beaten up. So if we do start pushing, or if we have any sort of good earnings report for it tomorrow morning, I do anticipate price to go through the $100 mark and come up, potentially tag this 105.96 before finding resistance and pulling back ever so slightly. In the coming days, should DG and DLTR continue pumping and pushing higher, we'll be looking at this declining trend line right around 120.73, as that's a longer term resistance for this trend on the chart. All right, guys, that wraps up Trading the Close. Thank you guys so much for watching and tuning in. I'll be back tomorrow. Look forward to seeing you on the charts then. Until then, have a great day.